Hi guys, welcome to our economics lesson. Today we are going to talk about explicit cost versus implicit cost in economics. Now the idea of explicit cost and implicit cost is actually to explain the difference between accounting cost and economics cost, because the way accountants define cost is different from the way economists define cost. So now we are going to look at what is explicit cost. So since that explicit costs are the actual monetary production. So you are running a business and you have to incur a lot of costs, such as paying your workers, such as buying your materials, such as paying rent, paying electricity. Those are explicit costs. And those are actual monetary costs. You can actually, they have monetary value. You are able to identify that my cost of electricity is 10,000 because you get a receipt. That's another way to identify your explicit cost. You get a receipt, right, for whatever cost you have incurred in the business. They have actual monetary value, and those are your explicit costs or your actual cost. And you also refer to them as the accounting costs. So explicit costs are accounting costs. So that means that accountants, they only look at explicit costs. They don't care about implicit costs. So what they're interested in is the actual monetary costs that are involved in producing, that are involved in purchasing materials, in purchasing equipment, in paying workers and all that. So that is what accountants are interested in. So explicit costs are accounting costs, and they are our actual cost that we incur in the business, or the cost that has monetary value. You actually get a receipt when you buy such materials or when you incur those costs. There's proof, there's a receipt. They have monetary value. So those ones are explicit costs. Now, let's look at some examples. A worker's wages, right? So when you pay for your workers, that is explicit cost, or that is accounting cost. There's actually a monetary value to say that, no, I'm paying my workers 10,000 each, right? Or we have rental costs. When you pay rent, that's your actual cost involved in the production of your goods. Equipment. So when you want equipment so that you can produce your goods and services. So equipment, when you buy machinery, there's a receipt, or there's a monetary value to say that, no, this equipment is 10,000, right? That makes that our explicit cost. And this is how accountants define costs, right? Now let's look at what is implicit cost. So implicit costs, we are saying that the implicit costs are those opportunity costs which are not reflected in monetary payments, and the cost which a firm must give up in order to produce something, right? So now implicit costs, we are saying that they are opportunity costs. For example, we're looking at the cost of giving your workers a day off. Assuming that you own a business, now you sell fat cakes, then for that day, you decided to give your workers a day off. So now the cost of losing your customers for that day, that is what you call implicit cost. So let's, for instance, say that you are supposed to make an income of 20,000 in a day. Now that 20,000, you could not make it if there are no workers that day, because you gave them a day off. So the money lost, right, becomes our implicit cost. Another example is the loss of interest income on funds. So you have a 10,000, you want to invest it, or you want to buy or maybe pay for your education, right? So if you decide to pay for education and you miss on the interest that you would have earned from investing your 20,000 or 10,000 in the bank, so that let's say, for example, maybe that 20,000 was supposed to earn you an additional 5,000, right? So the 5,000 becomes our implicit cost, because you did not get that 5,000 since you have opted to pay for education. I hope I make sense. So implicit costs are opportunity costs, or implicit costs are the cost that are forgone, or the cost of giving up something. For example, you decide to attend economics class. Now, the 2 hours that you're attending economics class, you could have used that time to watch a movie. Now, right, the time becomes our opportunity cost. So the time of you watching a movie, or the benefit you could have earned from watching a movie, becomes your opportunity cost, or your implicit cost. I hope that makes sense. Now let's define or differentiate between accounting cost and economics cost. Now you might think, of course, when you were defining explicit cost, we said explicit costs are also referred to as accounting costs. So you have your answer there. There you go, right? So accounting costs equals to explicit cost. If, for example, you are running a tuck shop, you have to pay your workers 1,000. You have to buy a flour, sugar, salt, and everything you need for 1,000. So explicit costs become 1,000 plus 1,000, which is 2,000, your actual cost. Now, let's look at what economic costs are. Economic costs, as I said, economists, they are not just interested in explicit costs. They are not just interested in the actual cost, but they also want to find out what is the cost of giving up something, right? So economic cost thus equals to explicit cost plus implicit cost. If you are calculating accounting cost, you only put explicit cost. And if you are calculating economics cost, then you have to add explicit cost plus implicit cost, right? And as I said, accounting costs, they are the actual cost. Economics cost now includes explicit cost, which is the actual cost, and implicit cost, which are opportunity cost. And I said implicit cost is a cost of giving up something. Let's take another example. You decided to, you work in a certain company, and that company pays you 1,000 per day. And for some reason that day, you decided to go buy a computer or to go buy food, right? Of maybe 1,000. So you did not go to work, you decided to go buy food for 1,000. So now when you buy the food, that's become your explicit cost, or the actual cost. If food is, the food you bought is for 1,000, that 1,000 is your explicit cost. Now we say you are supposed to be at work and your job pays you 1,000 per day. Now that 1,000 you did not get that day because you decided to go buy food. Now that is 1,000 that you forgone, or the 1,000 that you gave up, and that becomes our implicit cost. All right, now let's look at how you can identify explicit and implicit cost in the question. Now, let's for instance say you are faced with a question in the exam and a test, and you are not aware, or you just don't know how to identify explicit cost and implicit cost. So what you have to know is a difference between explicit and implicit cost. Just to remind you again, explicit cost are cost or actual cost that the business has to incur, and implicit cost are cost of giving up something. For instance, opportunity cost. Those are implicit costs. Now let's look at an example provided. Right, it says Fred currently works for a corporate law firm. He is considering opening his own legal practice. He expects to earn 200,000 per year once he establishes himself to run his own firm. To run his own firm, he would need an office and a law clerk. He has found the perfect office which rents for 50,000 per year. He could hire a law clerk for 35,000 per year. And to open his own practice, Fred would have to quit his current job, where he is earning an annual salary of 125,000. Now, calculate Fred's implicit cost and explicit cost if he decides to open his own legal practice. Again, let's look at our implicit cost. So let's look at our explicit costs. So explicit costs are the actual costs that the business have to incur. The cost of rent, the cost of wages, the cost of equipment, the cost of raw materials and all that, those are explicit costs. Now we are going to identify Fred's actual cost from the scenario. And in the scenario, it says that he found the perfect office which rents for 50,000. So this becomes our explicit cost. And it's also said that he could have a clear explicit cost that we have. So explicit cost is equals to 50,000 plus 35,000, which equals to 85,000. And we are also asked to calculate our implicit cost. And as I said, implicit costs are opportunities forgone, the cost of giving up something. And in this case, it says that Fred would have to quit his current job, meaning that he's going to give up his job. So meaning that the cost of giving up the job is our implicit cost. And I know that where he is earning an annual salary of 125,000, meaning that Fred will have to give up the 125,000 in order to establish his own law firm or law practice, right? So that this will make our implicit cost, meaning that our implicit cost equals to 125,000. Right now, in this answers it's easier for you to identify your accounting cost and your economic cost. As we said, accounting costs, they are the actual cost or the explicit cost. So that means that our accounting cost will be 85 economic cost, and we just say our economic cost equals to 5,000 plus 125,000, and you have our implicit cost. Right, that's all for today, guys. I hope you have enjoyed the video, and please, if you have any question, do not hesitate to contact me. I thank you until we see each other again. Bye.